In the past 50 years, the price of silver has spiked just 3 times. First, in January 1980, when two brothers tried to corner the market, amassing a third of the world's silver supply. The second time came in 2011, during the US debt ceiling crisis, when silver, alongside gold, was embraced as a safe haven asset. And the third, October 2025.
Silver reached an all-time high of $53 in October 25. That's been a 78% rise since the start of the year.
What isn't necessarily so visible is there was no available metal left in London.
Some people were having to transport silver by plane rather than on cargo ships.
Silver is often nicknamed the devil's metal among traders because of its volatility. Yet, unlike gold, silver is not just an investment asset. It is becoming increasingly crucial to the world around us.
Silver crosses over that bridge between precious and industrial metals, and the way technology is going on, it's got some great use cases as we move into a more electrified world.
So, what caused silver prices to peak? And what does it say about our reliance on this precious metal? What do Indian farmers, high-security London vaults, and solar panels have in common? Not much, you'd think, but these 3 forces helped push the price of silver to a 14-year high. On October 17, 2025, silver traded at $54.47 per troy ounce, a 72% rise year-on-year. But first, let's rewind to the start of 2025 to understand why.
The silver price had been lurking around about $30 to $35 an ounce band for the first half of this year. Gold gave it a little bit of its own buoyancy to start with. But more importantly, is that word again, tariffs.
In April 2025, US President Donald Trump announced a sweeping set of tariffs as part of his Liberation Day.
What we saw after Liberation Day was that the gold price spiked, but silver actually kind of went down a little bit. And if you're looking at the gold-silver ratio, that spiked to above 100. And previously that's been a big signal that silver is likely to outperform gold.
The gold-silver ratio, the price of gold divided by the price of silver, serves as an indicator for investment and market trends. It reflects how many ounces of silver are needed to buy 1 ounce of gold, helping investors gauge when to buy or sell. A low ratio means gold is relatively cheap, while a high ratio indicates silver is undervalued and likely to rise. And in April 2025, the ratio reached a historic high. Gold and platinum were exempt from the tariffs because they were deemed as essential to the US economy. But silver wasn't on the critical minerals list at the time, creating uncertainty about what would happen if it were.
The risk managers in financial and industrial entities did not want to let any metal go out of the States for fear that it might come back in at 35% higher, for example. So they'd been sitting on it, and that was starting to cause a little bit of tightness. And then India kicked in.
India is the world's largest consumer of silver. Every year, it uses about 4,000 metric tons, mostly for jewelry, utensils, and ornaments. Silver is also seen as an affordable investment option in a country where about 55% of the population depends on agriculture for their livelihood.
So we had a good monsoon and a good harvest, which means that farmers are coming back into the market with a fair amount of disposable income. And the farmers don't really like the banks very much. So gold and latterly silver tend to be the first port of call when they've got the harvest in.
The monsoon harvest season in India typically ends in late September or early October, and that time frame coincides with India's biggest public holiday, Diwali, a 5-day festival of lights celebrating prosperity and good fortune.
Diwali is the time of year when millions of Indians will buy gold for gifts, but this year we've seen a real rapid pivot into the silver market.
As preparations for the festival were underway, the price of silver in India rose sharply, reaching a record high of 170,415 rupees a kilo, an 85% rise since the start of the year.
Indians make early investments ahead of the wedding season, and the buying of gold and silver is a tradition which is focused around positivity and prosperity. This year, the high prices and lower volumes that we saw in gold meant people rapidly pivoted towards silver, so much so that we saw shortages in Indian silver refineries.
But 80% of India's silver supply is imported. And while the UAE and China are increasingly supporting that demand, the UK is traditionally India's largest supplier. And meeting that demand became a challenge. Since 2022, London's vaults have emptied rapidly. In June that year, the London Bullion Market Association held about 31,000 metric tons of silver. By March 2025, the volume had fallen by around a third, to about 22,000 metric tons, its lowest point in years.
We primarily do gold or gold coins. You can get hold of them reasonably quickly from the raw mint, but I've asked about silver and it's at least a 2-week timescale from when you order it. So even the raw mint is being affected.
In October, the squeeze was such that traders had to pay much higher borrowing costs to close their positions.
At one stage, to borrow overnight was costing 200% on an annualised basis. So a lot of people were very stressed. If you look at the London Bullion Market Association website, that will show X thousand tonnes in vaults, but a lot of that is allocated for ETFs. So it's not necessarily a free float.
ETFs can track stocks from a single industry, a set of companies, or commodities. The latter are also known as ETCs, or exchange-traded commodities, and many silver ETCs are guaranteed by the physical metal.
You could just buy physical metal directly, but then you've got to buy it, store it, insure it, you may have to pay transport costs. The alternative is to go via an ETC.
ETFs in silver have a higher component of retail investors than they do in gold. And retail investors tend to buy and hold and not necessarily trade out.
Gold experienced its own rush in 2025, with the price surging past $4,000 an ounce, its biggest rally since the 1970s, as investors search for a safe haven. So, why have people turned to silver rather than jump on the gold bandwagon?
Silver's a harder market to understand than gold at times. It's less covered by banks and by research. Silver is only about 1/10 the size of the gold market. And that short squeeze obviously sort of caught a few investors by surprise.
It's deemed sometimes to be called the poor man's gold, but that is one of the reasons why it tends to be more volatile as well. People are more likely to buy on a whim, whereas gold has a history of an allure.
If you can't afford to buy into the gold market because of the price of gold at the moment, then what's your alternative? Your alternative is to go and buy silver.
The idea of gold being a store of value goes back centuries, if not millennia. It's always been there. Something that has backed currencies, and particularly reserve currencies, for years. And silver, similar but different. It's a much smaller market, so it can be more volatile.
Gold and silver, obviously as precious metals, have always been seen as a great diversifier for investors' portfolios. And I think this year we've obviously got a lot of geopolitical tension. We've seen the dollar depreciate, there's trade wars, there's tariffs. We're seeing a whole broader spectrum of investors coming in, hedge funds, central banks, retail investors as well. And that's really driven the price of these precious metals higher.
Throughout history, silver's shine has also attracted gamblers, driving its levels to nearly as high as today.
As of around about the middle of 1978, the Hunt brothers, who were the sons of the oil tycoon, they wanted to try and show their dad that they could be as clever as he was, and they decided the way to do it was to corner the silver market, and they jolly nearly did it.
Then we had sort of 2011, post-financial crisis. There's a couple of themes here that are continuous. The concern about the dollar, concern about inflation, concern about the US credit rating. So in 2011, we had a downgrade of the US from AAA by S&P, which coincided with very low rates and also quantitative easing. So the idea of printing money being inflationary and how you hedge that also came to the fore.
And silver is increasingly being viewed as an investment, thanks to its role as both a precious metal and a currency.
Silver doesn't really have that safe haven status that gold has always enjoyed, but it is drawing more investor interest.
Although there's VAT on the purchase, it still can be an attractive investment. But I don't think anybody should buy into anything like this thinking that they're going to make a quick buck. Want to keep it as a store of value.
Another reason for increased interest? Silver's unique industrial applications.
It's got a higher thermal conductivity and a higher electrical conductivity than any other metal.
50 to 60% of silver is used for industrial uses.
Over the past 8, 9, 10 years, the supply that's been coming into the market has exceeded industrial demand plus jewellery and silverware. But over the course of the past 12 months or so, that underlying surplus has started to turn into a deficit for 3 reasons. One is the impact of the electrification of the vehicle fleet. Another is artificial intelligence. And the third one is photovoltaics.
Over the past 8 years, industrial demand for silver has grown steadily, from nearly 31,000 metric tons in 2016 to over 36,000 metric tons in 2024. This growth is mostly coming from solar panels, electrical components used for EVs and AI, as well as metal joining processes like brazing.
some of the technology that's starting to come through, which hasn't really hit yet on silver battery technology, could see demand increase very, very rapidly. At the moment, a standard electric vehicle has about 25 grams of silver. Maybe the larger EVs have 50 grams of silver as part of their components. If we move into these solid-state silver batteries, each electric vehicle might require a kilo or more of silver.
The strategic tensions between the US and China over rare earth minerals, that's really brought a greater focus onto the industrial uses of metal in the industry, whether it's gold, silver or copper. There's been a real contrast between the speculative rally that we saw in the 1980s compared to the real world developments that we're seeing in green tech and renewables, which is really helping push the silver price higher right now.
So where is silver heading now? According to the Silver Institute's 2025 World Silver Survey, mine production has been decreasing over the past 10 years, especially in Central and South America. While Bolivia and the world's top silver producer, Mexico, both recorded year-on-year growth between 2023 and 2024, other Latin American countries, Argentina, Peru, and Chile, saw their production decline due to mine closures, resource depletion, and infrastructure challenges.
Only 28%, typically, of world silver mine production comes from primary silver mines, to which you can therefore ascribe a cost of production. Everything else is a byproduct of either lead and zinc, or copper, or gold. So the silver market structure, when it comes to the mining, is as much a business function of the outlook for those base metals as it is for the metal itself.
Unless we find a new source of supply or a more efficient means of getting more silver out of the ground, it's very hard to close that deficit and actually meet the requirements that we currently have.
I wouldn't be at all surprised to see a few old exploration projects being dusted off right now.
Now, silver is a commodity, obviously, which makes it unpredictable and volatile, but broader markets are also unpredictable and volatile. Right now we're seeing questions over the AI bubble, we're also seeing a big sell-off in crypto. It's that kind of market backdrop which is making things absolutely ripe for a pile-in into alternative assets, real assets, whether it is real estate or things like precious metals, including silver.
BNP Paribas predicted that silver could reach $100 per ounce at the end of next year.
I hate to use the bubble word, but it's relevant here. I've referred to silver as the Cinderella metal because she's been below stairs, no one's taken any notice. Then fairy godmother appears and says, "You shall go to the ball." She captivates everybody's attention, but at midnight, she goes much more quickly than she arrives, and that's how the silver price behaves practically every single time. When it comes off, it'll come off big time.
We've seen the spike up, we've seen the price come down a little bit. I think longer term, there's a different dynamic this time that could keep silver at reasonably high prices and maybe continuing to go up for some time to come.